Hey everyone, in this video I'm going to dig a little deeper into SoFi stock's earnings call to try and answer some questions about what's going on with SoFi stock. Those of you that are following SoFi stock know that it reported earnings on May 1st and the stock price fell as a result. You could see the stock had reached the peak over $6 per share and then collapsed all the way down close to $4.80 after these earnings results came out. It has since recovered a little bit, but it's still below where it was before it reported earnings. Now, in the earnings report, the company delivered very nice revenue growth and raised the target for the year, which had some SoFi stock investors asking me, hey, what's going on with SoFi stock? Why is the price crashing after it essentially beat and raised in the quarter? So after all those questions that I received, I thought I'd put together this video to elaborate a little bit more on what's going on with SoFi stock and potentially why the stock price fell after earnings. So let's get into some of those figures. So here I have pulled up SoFi's earnings call that was conducted on May 1st, where the CEO and CFO elaborated on what happened in the quarter. Starting with the CEO saying that they completed their 8th consecutive quarter of revenue growth and 460 million, which was up 43% year over year. Revenue growth has not been a problem for SoFi stock. That's been a mainstay for SoFi investors. What was interesting was this next point here. Deposits increased by 2.7 billion from the previous quarter. There was a lot of concern that how SoFi stock would react from all the banking turmoil that happened in the first quarter, and people were concerned that maybe depositors would flee SoFi Bank and take their money elsewhere. But looking at the deposits increasing by 2.7 billion from the previous quarter, that relieved a lot of concerns about depositor flight. So that was very good news. And the CEO reiterated that more than 90% of our consumer deposits are from sticky direct deposit members, and 97% of their deposits are insured. Um, what the CEO means by sticky is that it would take a lot of work for consumers to switch banks if they have direct deposit. Because if you have direct deposit, you've probably set up and completed paperwork with your employer to set up SoFi as your direct deposit bank, and you're probably using SoFi as your primary bank now if you have direct deposit, right? So your paycheck is going into SoFi. That means you're probably using SoFi as your primary account to pay bills, when you use your debit card, when you're spending. And so if you were to consider switching, it would take a lot of effort, right? You would have to switch all those online bill pays, you would have to switch your direct deposit. And so that's what the CEO means by sticky customers, which is good news if you're a SoFi stock investor, that these customers are likely to stick around longer term. The company added 433,000 new members in Q1, which brought the total members to 5.7 million. This was up 46% year over year. So the company doing a phenomenal job increasing customer count and then serving those customers with their various financial products. Additionally, their team was able to bring their deposit, the FDIC insurance, from 250,000 up to 2 million. And they did that within a week, and that was a big deal because if you're not aware, the FDIC insures your deposits in banks up to $250,000. So even if a bank goes bust, you still get your money insured from the government at 250,000. But that left some people worried, those people that have between 250,000 and more, that leaves them concerned about that extra money. And so SoFi was able to relieve some of those concerns by adding insurance up to 2 million. So now people with up to $2 million can feel comfortable with their money in SoFi because they've got insurance now. So you might say, Parkev, everything you've mentioned so far is good news. So why did SoFi stock drop after earnings? And why is it still below the level it was before the earnings? And it's because of this point I'll make here. The CEO saying their personal loan performance more than offset continued headwinds in demand for student loan refinancing and less robust performance of home loans. So this is the key here, is that SoFi benefited mostly from making personal loans, and that offset the headwinds from significantly declining home loans and student loans. Investors prefer that SoFi make home loans and student loans way more than they prefer SoFi making personal loans. Why is that the case? Well, think about it. If you're going to default on one of your loans, if you have a student loan, a home loan, or a personal loan, which one of those three are you going to be first to default on? Well, it's not going to be your home loan, right? If you default on your home loan, they'll come and take your house. You'll foreclose. You won't have anywhere to live. So it's not going to be that one. So then it's between your student loan and your personal loan. And the student loan is not one that, if you look at bankruptcy law in the US, there is a thing where student loans are less likely to be written off in bankruptcy court. So that leaves your personal loans, which if you default on and you file for bankruptcy, there is no recourse for the lender to take. The lender can't come after any of your assets. So SoFi has no collateral it could come after to take from these borrowers that defaulted on their loans. So they're more risky. And so what happened in the quarter is that SoFi just became significantly more risky because it made more personal loans and less student loans and less home loans. And just because of that, right? And I've said this in my videos, when risk increases, valuation decreases. Just that one factor. When risk goes up, value of a stock goes down. Even if profit goes up and revenue goes up, if risk increases more than offsetting that, the stock price will go down. And that's what I believe happened to SoFi stock this quarter. It was just a matter of elevated risk that brought the stock price down, because otherwise it had a really good quarter. You saw great revenue growth, great customer growth, great new product adoption, all of that. Everything looked good. The one thing that was a red flag was the growth in personal loans as it relates to the overall loan portfolio. It just grew to a larger percentage of the overall loans. All right, so that's all I've got for this video. I hope that sheds some light onto what's going on with SoFi stock. Thank you for watching. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.